None of the businesses that I was in previously was like a syndication type of model. What I really loved about apartments was the way that you could leverage vendors, systems, and teams to come in and create and build wealth for myself and for other people. I saw people get greedy. I saw people, when some risky financing became the only way to buy deals, kind of throw caution to the wind. Really what yielded fruit for me as a sponsor was I found out who were the 10% of the brokers that were doing 90% of the business. I sought to find out, John, who the brokers were, the 10% of brokers doing 90% of the business, and I really put my focus on getting to know them and building relationships with them. I came into the industry and started buying deals 2011, 2012. Because I got after it, those people would approach me with regret that they did not come in off the sidelines and buy and invest in deals with sponsors in 2012, 2013, 2014. And I really feel here in 2024 and 25 that that's going to be the exact same situation. Having a mentor, certainly in the foundational area when I was really just learning the knowledge, was absolutely huge. Because of the way the business was modeled, it was going to allow me, while I was building and creating wealth, to also have a life.
Welcome to Escape Velocity Podcast. It's a podcast dedicated to your financial independence as a person. So we are bringing people, we are bringing opportunities that will help you to elevate your life and also help you to escape the financial constraints that we all do have in life. So thank you for joining us today. I have a wonderful guest in our midst today. So this particular guest, I cannot really tell my story without mentioning his name. He played a very pivotal role in my journey as an apartment investor. So welcome. Today we have in our midst Aaron Katz.
Hey John, how are you? Great to be here with you today.
Thank you very much, sir. Welcome to our midst today. So in this podcast today, we are going to be talking about Aaron's journey in apartment investing, what he would do differently if he was starting all over again, get to know him as a person, and what advice he has for us as an apartment investor. So Aaron, would you help us introduce yourself to my audience?
Yes, hi everybody. My name is Aaron Katz, and I've been an active apartment investor, both a sponsor or syndicator of apartment investing projects, as well as investing passively in other sponsors' projects as well. Going back to 2011, my first syndication deal was in 2012. That was a 90-unit property right here in the DFW Metroplex in Arlington. I've sponsored 14 projects as a general partner since then, actively, passively invested in another 18 projects, so a total of 32 projects across about 7,000 doors. Nice. I like to consider myself a slow and steady deal sponsor. I like to do about 1 to 2 projects a year, but I like to make sure that they're the right projects with the right partners in the right market and sub-market at the right time. So I could have done 100 deals over the years. Right. I've been extremely cautious in the deals I've done, and maybe sometimes I missed out on some great opportunities, but I can look back and know that by being prudent and cautious and passing on some opportunities that sometimes brokers were willing to hand me as long as I could meet a certain price, and I had to intelligently walk away. But I'm glad that I did, because 12 years later, I have a great reputation in the industry. I've never lost as an investor as much as one penny. I have a lot of full cycle deals with an average total return of over 100%, meaning anybody that invested with me in any of those projects more than doubled their money in an average hold period of 3.5 years, which is a 28% plus average annualized return. Yeah. So I've cultivated a good reputation. I have the trust of a lot of investors, and I'm now poised to take advantage of the opportunity that the current market is bringing to people that are ready to step up to the plate and intelligently buy some terrific opportunities that we're seeing now, and more that will be on the way as we move into the second half of this year and into 2025.
That's great. That's great. So tell me a little bit about your background. You know, how did you get started in apartment investing? What was your life before then?
Well, I'm the son of an entrepreneur.
Okay.
I'm a first generation American on both sides. My mother is from England. My father is from Russia. And my family came here and really achieved the American dream. Came here poor. In the case of my father's family, came to the United States from Russia by way of Israel. Didn't even speak English, but saw the opportunity and that was offered here in America and really seized it in becoming entrepreneurs and launching their own businesses. In the case of my grandparents, dry cleaning and formal wear, tuxedo rental type of businesses. My father eventually in the mattress business, and I followed my father into the mattress business. That's in fact what brought me down here to Texas in the early to mid 90s was being an original partner in a company called Mattress Giant when I moved down to Texas from the Washington, D.C. area. Nice. So my background is all about small business ownership, management, sales, managing people, taking the big picture of a project and coordinating all the different spokes that come out from the center of that wheel, making sure that everything works together and just kind of seeing that big picture to fruition. Yeah. So I grew up in that environment, and that's been my experience as well. And that was the skill set that I felt that I could bring and the experience to apartment investing when I came upon it back in 2011.
Well, that's great. So I see like a lot of transferable skill set that you got from your mattress business and now into apartment investing. That's really good. So why apartments? Why? I mean, there are several asset classes out there. When you were doing your research, you want to do the transition from, your mattress business into apartment. Why apartment?
I felt that when I came upon apartment investing, again, I felt I had those transferable skills.
Right.
What I didn't have was the industry-specific knowledge around apartments. So I sought through mentoring and education to learn the skills necessary that would help me to be successful in this business, taking the skills that I could bring from my prior business experience and prior life experience. Right. What I really loved about apartments was the way that you could leverage vendors, systems, and teams to come in and create and build wealth for myself and for other people, those people that chose to align with me and trust me to be a steward of their money in the way of passively investing with me in my projects over the years. And I'm fortunate to have a lot of loyal investors that continue to invest with me and have been investing with me in a decade plus because they trust me to be a steward of their money. But I saw it as a business that while I was doing that for myself, for my family, and for passive investors, because of the way the business was modeled, it was going to allow me, while I was building and creating wealth, to also have a life. Okay. Because real estate investing is a part of my life, but real estate investing is not my whole life. I put the proper focus on it, but I also believe that if I don't have a balanced and holistic life in all other areas of my life, I'm not going to be a very effective real estate investor in the long run. I'm going to burn out, and I'm just not going to be a happy person in the first place, right? And what is the purpose of anything if we're not happy, right? All the money in the world doesn't mean anything if you're not a happy person enjoying your life. So apartment investing allowed me to do that for myself and my family. It allowed me to help a lot of other people, which I've been able to do, and I'm continuing doing now in 2024 and moving forward in terms of helping them meet their own financial goals, to create financial comfort, security, and freedom in their own lives by passively investing in apartments with me. Yeah. And to continue to also have a full life in all areas of life.
So within your journey as you were going through your mentorship, I wanted to know what impact did having a mentor play in your journey into apartment investing?
I think having a mentor, certainly in the foundational area when I was really just learning the knowledge, was absolutely huge. You do have to invest in your education. It might be joining a mentoring program. It might just be attending events, some of them with a fee,
Right.
Maybe some of them free, just like you began and came to a lot of my meetup events many years ago, and that helped you get your start. There's a lot of great events out there. I think there's more information out there than ever before that can help people to become successful in apartment investing or just to become educated. Certainly a lot more information than when I got started in the industry back in 2011. I think that a mentoring and education program can be very beneficial in the beginning. I think there comes a point where you really you've grown and you've soaked up all the information that can be had there, and then there comes a point when you trust on your own instincts and your own experience.
Right.
Even to this day, though, I continue to attend a lot of different events. I try to hear a lot of different voices. I'm always willing to hear and learn what anybody might have to teach me. Some of the information I hear resonates with me, and maybe some of it doesn't.
Right.
And the stuff that resonates, I employ, and I help it allow me to become the best deal sponsor and steward of investors' money as possible. And the information that doesn't resonate with me, well, that's fine too. At least I'm open-minded enough to listen.
Yeah.
So I certainly think that everybody out there should, one way or another, invest in their education, whether it's through a formal mentoring and education program or just getting out there and meeting people face to face. There's nothing like sitting down and having a conversation in person.
Right.
We could be doing this with me sitting in my house an hour's drive north of this downtown Dallas location in Plano. But when you offered me graciously the opportunity to come and talk with you, I told you that I wanted to come to you, and if we could do it in person, that would be even better. And I think that's the energy. That's the way I like to have conversations with people.
Right.
I'm very much a relationship-oriented person when it comes to business, and I think that's helped me to be successful in the business and to grow a solid reputation, and being somebody that people like to do business with, whether it's brokers wanting to do deals with me or whether it's investors trusting me. I think it's about allowing people to know who you are and just sitting down and having conversations like this.
No, that's great. That's great. So I think I alluded to this in the beginning when I first moved back to Dallas, Texas. So I was just looking around, searching for an investment, team or group, near my area that I can definitely be part of. So I went to an app called meetup.com and searched for apartment investing near me. And Aaron's group now came up. So I came and I think you advertised for Brad Summerrock's Race to Retire. And I decided to go to that event. So in that event, that's where I met a lot of deal sponsors that I've invested literally all my deals with right now. But unfortunately, I've not done any deal with Aaron.
What's going on, John?
Hopefully, we're going to do some deals together someday.
Sounds good.
But Aaron played an integral part, and what he was talking about, there are plenty of information out there for you guys who would want to learn one or two things about apartment investing. You can come out, if you are in Dallas, to Aaron's. I know he's going to share more information about that towards the end of this podcast. But yeah, that's how you can educate yourself. That's where it all starts, from investing yourself, because you will pay the most return, right? So Aaron, could you walk me through your first deal? I mean, from the time you joined the mentorship program to when you did your first deal, how long was that, and what was the experience like for your first deal?
I joined a mentorship program in April of 2011, and at that time, I didn't get right after it. I didn't want to invest passively at that point.
Okay.
I've since, as I said, I've invested passively in many, many deals,
Right.
but that came later after the liquidity and the profits from my own syndicated deals as a sponsor. And then they started throwing off so much cash that I had to invest the money into something. And obviously I'm very bullish about apartment investing. So I didn't take that money and invest it into another asset class. The money that was being thrown off that I wasn't going to put in my own deals, I put it into deals with other experienced sponsors that I trusted to be stewards of my money, just like I ask the people that passively invest with me to trust in me to be a good steward of their money. So when I joined the program back in April of 2011, at first I defined my criteria. I said, what type of deal do I want? I knew I didn't want to invest passively because I think some people come in and invest passively. And if you want to be a passive investor and you have the money to invest, whether it's cash or through a self-directed IRA or trust, multifamily is a great place to invest your money. If you find the right experienced sponsor that you can trust to earn terrific returns on your money and to help build and create wealth. And like I said, some degree of financial comfort, security, and freedom. At that time, though, I was looking to be a sponsor of apartment investing projects, bringing my background and experience. So I said I'm going to spend 6 months just soaking up the education here. I'm not going to invest passively, but I'm going to do a deal. It's going to be a 60 to 100 unit deal. It's probably going to be a C-class deal. It's going to be here in the DFW Metroplex. It's going to be in a sub-market that meets this certain criteria. I can't remember now. We're going back quite a ways to exactly what that criteria might have been. But I very specifically defined the criteria of what that deal was going to look like. And before I actively got out there and was engaging with brokers and actually touring deals, what I started to do was meet with people that I would meet at that mentoring and education organization, or that I would meet at other meetup events, or just meet out and about, and I would get their contact information. And I would set up meetings with them. Maybe it was to sit down for coffee, or it was to meet for lunch. Certainly this is before people were doing Zoom, so this was all in-person stuff. So I met with a lot of people all over the DFW Metroplex just on a get-to-know basis. And I shared my vision for what I was looking to do in apartment investing. Now, I'd met all these people in apartment investing circles, so I knew that they were already familiar with what a great investment vehicle investing in apartments can be. So I didn't have to sell them on investing in apartments. They already had the knowledge of why they would want to invest in apartments, and many of them were already active passive investors in apartment investment projects. But I just had to let them know who I was as a human being and why I would be a good steward of their money to trust in an apartment investing project. And then I was able to also communicate that vision and that criteria that I had for my first deal. And at the end of sitting down with them for an hour or so and hopefully building a great rapport, I would say, when I find a deal that meets this criteria that I've defined to you, can I call on you for a potential investment in this project? And I built that rapport, so just about everybody said yes. So then when I did land that deal in 2012, I took that 6-month period just to learn and educate. I finally got out there, and then in early 2012, about 8, 9 months, 10 months after I joined the mentoring and education program, I found that deal. I was able to go forward on it, acquired that 90-unit property that met all of the criteria in Arlington, Texas. And then I'd already spent time building up a database. So it wasn't hard to raise the money for that deal. I didn't wait until I had the deal in hand to start building the capital for that. I'd already been doing that over the intervening 8, 9, 10 months in meeting with people. And I've really just continued to build my investor database, John, over 12 plus years the same way, meeting people, getting to know them, forming those SEC compliant relationships so that when I do move forward on a project, and as I said, I'm not doing 10 deals a year, I'm not greedy, it's typically 1 to 2 deals a year with the right partners in the right markets and sub-markets, then I'm able to call on that database that I've now grown to be quite extensive, obviously over 12 plus years.
That's nice.
And capital raising. I'm able to go out there and raise the capital to fund these projects and help a lot of people achieve their financial goals while I'm helping my wife and myself achieve ours through apartment investing.
That's great. I mean, one thing I'm coming to realize and learn right now, you don't actually raise capital when you need the capital, right? You raise capital like way months, years beforehand that you need that capital. So how did you find the deal? Were you like the meetups that you were having, were the brokers included in the meetups? How did you find the deal? Was it on LoopNet, Crexy, or any of the websites out there?
I did all of the loop nets and all of that back then, but they didn't really yield much fruit. Really, what yielded fruit for me as a sponsor was I found out who were the 10% of the brokers that were doing 90% of the business in the market I wanted to invest in, and the market I wanted to invest in, and the market I still focus on. Not to say I haven't done investing in other areas, but primarily it's the Dallas-Fort Worth Metroplex. I live here. I've been here since the 1990s. I know this market like the back of my hand. I've been involved in other businesses in this market, so I have a really good feel for the DFW Metroplex. So I sought to find out, John, who the brokers were, the 10% of brokers doing 90% of the business, and I really put my focus on getting to know them and building relationships with them. And another thing I did early on, and I don't even know if you're aware of this, you might have heard me talk about it, I was offered the opportunity when I had 2 deals as a sponsor under my project. My second deal after that first 90-unit deal was a 116-unit deal in Irving, Texas, that I had 30-plus passive investors. Both of these deals, like most of my deals, ended up more than doubling investors' money in those projects. But I had those 2 deals under my belt, and I was really just getting going, and I was offered the opportunity by a mentoring and education organization to work in the buyer brokerage area, which means that I would help the students in that particular mentoring and education organization at that time go out and buy their own deals. I really, sure, it brought in some great income for a couple of years there while I was getting my first 2 syndicated deals up and running. But I really saw it as a means to an end to eye more deals, look at more underwriting, put my feet on more properties, and probably most importantly, to continue to get to know and build relationships with those brokers. Obviously, it helped serve those students that I was helping buy properties, but the end goal was ultimately that it was going to continue to serve me in terms of being a sponsor of apartment investing projects. So I did that for a couple years. I helped 20 plus students in that particular program acquire apartment communities. Many of them, it was their first one. They were just getting going, and some of them have gone able to do great other things. So I'm always happy to play a part. I'm of the abundance mentality. I want to see as many people succeed as possible. I try to always be of the creative mind and not the competitive mind. There's enough to go around for everybody. So I want to succeed, but what I want for myself, I want for everybody else too. So that provided a lot of experience. And then in about 2015, it became more of a job than I wanted in terms of the time commitment that it was requiring. And so I just stepped away, and then I really put my foot on the accelerator of seeking to buy my own projects for myself and my investors. And some of those deals I did in the next couple of years ended up being some of my most successful projects even to this day. Deals that, more than that tripled, or in some cases more than tripled, investors' money in like a 2.5 year period. Just some crazy returns that I was able to achieve at that period of time.
That's great. That's a lot of knowledge and information for me. Being like, I'm just starting out, right? In my capital raising journey, my GP journey, and all that. So this is great insight for me. So one question that I have for you: when you were in business, did you ever raise funds, or raising funds was just a skill that you acquired in apartment investing space?
None of the businesses that I was in previously was like a syndication type of model where I raised money. It was more like we're in the mattress industry, or we're in a certain industry together, John, and I know you, and we know 2 or 3 other guys. So we all just kind of pool our money together, and then we start something, and then we grow it from there. That was my prior business experience in terms of growing businesses. It was not the syndication model like this. Now, with that being said, I had a lot of experience in the area of sales and marketing. I was on straight commission sales floors beginning at 19 years old. So some of those skills that I learned going way back then in terms of communicating enthusiasm and yet being persuasive, honest persuasion. When I was enthusiastic about things I genuinely believe in. Even to this day, I never move forward on an apartment investing project unless I'm completely excited about, and I believe 100% in the project, the market, the sub-market, the partnership. Everything has to feel right for me. Sure, all the scientific data, all the numbers have to line up, but it also has to feel good right here in my heart and my gut, or I just walk away from it. And I think I think you said you were going to ask about maybe some lessons I've learned.
Yeah.
One lesson I've learned, especially over the last couple of years, because I've seen it bear out, and not to say I haven't learned lessons from my own experience, but I saw people get greedy. I saw people, when some risky financing became the only way to buy deals over the last couple of years, I saw a lot of people that had been cautious about that type of financing kind of throw caution to the wind.
Okay.
And I think in doing that, those are some of the deals right now that are struggling. I have some deals right now that I bought over the last couple of years, but they had a story or a reason, and I moved very cautiously forward on those. I wasn't greedy. It's always about doing the right deals with the right people. It's not about doing 3,000 doors by this certain period of time for me. I'm not going to put that kind of constraint. I'm going to make sure that I feel good about a deal and that it checks all of the boxes. So because I've done that, all of my current projects, and sure, there's been some operational challenges and headwinds that anybody that's somewhat of a student of multifamily or as an active investor is going to be aware of. But I'm extremely bullish about the long-term success of all of the projects that I bought over the current years. Okay. They're not facing some of the horror stories people might be hearing. And I like to think that that's because of the way that I've always approached doing deals, the way that I've always approached partnerships and potential partnerships with people. So I'm bullish about those opportunities. Now, because of those headwinds and because of the reset that has now happened, I think we're looking at some of the greatest opportunity in many, many years in this industry to buy deals at a great basis and ride what I think over the next 5 to 7 years is going to be a great another wave up. And sure, we need to be intelligent and cautious because of what's taking place in the current market. But I really, John, right now, I look back, I came into the industry and started buying deals 2011, 2012. We were still coming out of that financial crisis from 2008 and everything that had happened. So not everybody was buying apartments. Financing was just coming back online. I think people were still having to buy deals with cash, and like a year before I came into the business, and then financing was just coming back online. So I got active in 2012 and started buying deals, and then I would run into people in like 2018 and 19 and tell them when I got started, and they're like, "Oh wow, you came in at a great time. I wish that I had gotten started back at that time." But at that time, in 2012, people were still being cautious, and people were kind of maybe sitting on the sidelines a little bit, waiting to see what was going to happen. And because I got after it, those people would approach me with regret that they did not come in off the sidelines and buy and invest in deals with sponsors in 2012, 2013, 2014. And I really feel here in 2024 and 25 that that's going to be the exact same situation. I think 5 years down the line, people are going to come to myself and people that trust in me and invest with me right now, and they're going to be like, I wish I had been buying deals in 24 and 25 and investing with Aaron and other educated sponsors that have experience and actually know what they're doing. Now, at any time, you always need to make sure that you're investing with the right people. And you need to invest with people that are being cautious and taking all of the most accurate information they can at any given time to make the most intelligent buying decision. That goes without saying. But there's so much opportunity that's here right now and is going to be coming online here, moving into the second half of 2024 and 2025. So I would encourage your viewers, especially if they're looking to invest passively, to get to know sponsors. Take this time now to get to know the people that you want to invest with, and then see what they're going to be coming up with, because there are going to be some great wealth building and wealth creation opportunities.
No, that's great. I like that you touched the current situations going on in the real estate market right now. And you said something that really caught my attention, and I wanted to delve deep into that. You said for you to invest in a deal, it has to feel right in here, right? So I wanted to understand, what criteria are you looking for in a deal for it to feel right for you?
Well, that's a great question. Every part of the deal has to check out, right? Mm-hmm. Obviously, the financial underwriting has to make sense.
Right.
When I look at a deal and move forward on a deal, I have partners in the deal. Mm-hmm. I have vendors. I have a third-party management company, and I want to have a lot of eyes on the deal. Mm-hmm. And I always encourage people. I'm a very straight shooter. Okay. Mm-hmm. I tell people, let's never be afraid to step on each other's toes and say what needs to be said. So that's the type of communication that I ask for from a third-party management company.
Okay.
That deal has to be vetted and checked out by them. It has to make sense to them. It has to make sense to me. It has to make sense obviously, we reach out to insurance consultants, to tax consultants, to make sure that we're underwriting the deal properly. So certainly there's just the financial underwriting at the beginning, right? Mm-hmm. And making sure that many eyes on that. Mm-hmm. But then there's a market, there's sub-market, there's looking at industry data, CoStar reports, et cetera, to make sure that you're taking all of the best information you can at any given time to make the most intelligent and thoughtful decision that you can, because you're putting your own money on the line, reputation, and obviously I'm asking for passive investors to trust in me to be a leader of their project and to be a good steward of their money. So the partnership has to feel good. And I think by trusting my own instincts in all the different areas, certainly, like I said, underwriting has to make sense. The partnership has to make sense. It has to be the right market. It has to be the right sub-market in a particular market. So it just has to meet a lot of different criteria. And then beyond just checking all of the boxes on paper, I trust my own instincts.
Right.
And it has to feel good to me.
Right. No, that's great. That's great. Yeah. So another question for you. The partnership has to make sense, right? What are some of the things that you're looking for in a potential GP partner? I mean, we've heard about it that apartment investing is like you are entering marriage for like 5 years, right? You have to make sure that you date the person very well, get to know one or two things about them. So what are some of the characteristics or attributes that you look for in a potential GP partner?
I think right now, an attribute, and this has changed obviously over the years, because as I've looked how to do my business and the roles that I'm going to bring to any potential partnership, that's changed over the years. I think I'm looking for people that are strong underwriters, that know how to look at a property and underwrite it. Some level of experience is important to me. I partnered with people that were just coming into the industry and were brand new earlier in my career in the business, but I want to partner with people that have at least a few deals under their belt. Capital raising. I want to partner with other strong capital raisers that can also bring some capital to the deal, whether it's their own and obviously investors' capital as well, passive investors' capital. And I'm looking for people that can also be strong asset managers. Obviously, right now, especially asset management is extremely important. And I, for many years, I was involved on the day-to-day on many of my deals. I was the only GP in the beginning, so I wore all of the hats, including the hat of asset manager. And the role that I'm looking to fill now is I'm involved in my deals. Post-close, I'm going to be a consultant, but I'm not usually going to be that primary asset manager that is communicating on a daily or near daily basis with the third-party property management company that's operating the project. So I'm looking to partner with people that are competent in asset management as well as all of those other areas that I mentioned. So I think right now that would be some of the criteria that I would mainly be looking for in potential co-GP partners. That's just at the operational level. Obviously, right now, bringing capital to these deals is extremely important. And I'm looking for people that are largely in those roles that are based here in the DFW Metroplex, because that's where my broker relationships are and where I feel that I can bring the most value to any particular project. With that being said, there are people out there that want to come into the industry and be GPs, and maybe they have a database of potential investors from a corporate career or from other careers years, and they are just getting started in apartment investing and looking to come in as GPs or want to fill a role on the GP team, but can also bring capital to the deal, even if they're out of area. So obviously, I, like any other sponsor, I'm always interested in meeting those potential GPs that could bring a significant amount of capital to these deals to help us fund and acquire these projects to create these great wealth building opportunities for everybody involved.
That's great. That's great. So I've heard you mention over and over again that you are investing in DFW, right? And that's also the market that I'm into. But I wanted to know, is there any other market that you're investing in right now, or just everything is clustered in DFW?
I've invested passively into some other markets.
Okay.
Florida markets, Nashville. One of my GP sponsorship deals out of the 14 I've done was in Houston, but everything else has been here in DFW. Nice. I'm very much a focus-oriented guy, John. You've probably figured that out. You follow me on Facebook. Right. You've attended my events. Yeah. It's just the way my mind works. Follow one course until success. Focus. So with that being said, and even like when I was getting started, what did I do on that first property? I defined my criteria. Not keeping options open, but actually narrowing the focus of what it is you're looking for. Because I think that helps people make decisions when they actually narrow their focus. So I largely am targeting Dallas-Fort Worth, becoming an expert in this particular market, the challenges, the headwinds that we face, but also the opportunity that we face. Dallas is a very landlord and business-friendly market. We had 152,000 people move to the DFW Metroplex last year to put us over 8 million, which leads the nation. Right. That's going to continue. That's because jobs are here. There's economic growth, and obviously this population growth is going to create a demand for apartments moving forward. Currently, obviously, we've had more completions come in line right now in this market than any year previously in terms of new apartment completions. But starts are way down, which means in a couple of years, by 2026, we're going to have hardly any to no new apartment completions come online. And what that's going to do at that time here in this particular market, it's going to drive rents and it's going to drive occupancy. And that's why I think there's going to be 2026 and moving out the next 5 to 7 years, I think we're going to be able to ride another great wave up in apartment investing. We just need to successfully know how to navigate some of the headwinds and challenges that are going to be here in this particular market until we hit that wave up in 2026. And I think if somebody brings experience to the table, they're going to know how to successfully navigate and thoughtfully respond to those challenges to get out the other side and then to ride this wave up.
Okay. That's great. And finally, I got into your investor database. I know you've been sending out emails about a particular portfolio property you guys just closed. Could you walk us through what was the experience like? What are the lessons learned? And what would you do different if you were to start, the whole Avanti project all over again?
Yeah, John. So what John is referencing is a 195 unit, 2-property C-class portfolio here in the mid-cities of Dallas-Fort Worth, and in particular Euless and Bedford. Interestingly, it's the 2 properties are about 500 feet apart, but one sits in Bedford and one sits in Euless. So they sit in 2 different cities out in what's called the HEB submarket or the Hurst-Euless-Bedford submarket in the mid-cities of Dallas-Fort Worth. And one property was 137 units, another property was 58 units for a total of 195 units across the 2 properties. And that particular submarket is extremely strong. We have a median income of 61,000 or 61K within a mile and 73K within 3 miles. For a C-class property in a B and C-class submarket primarily, that's an extremely strong demographic. So it's a highly desirable area. And this particular project presented a lot of good opportunity because we're able to look at what rents are already being commanded buy properties in the area that are going to come in and have come in and done a similar type of upgrade program and a CapEx program to us. So I never want to be the first guy on the block to come in and prove something out. So in this case, we had a lot of comps to look at that if we came in and we put money into the property and we did what these other properties have done, that we were going to be able to achieve the same results that they were going to achieve. It's very similar to the mentor model, right? You find somebody that's done what you want to do successfully, and you follow and kind of do what they done. That's what we do here in the apartment business too. When we're coming, we come into a particular submarket and we see what's being done. Now, this particular property had an owner that, well, for lack of a better word, he wasn't taking care of the property. He wasn't taking care of the residents. The occupancy was still pretty strong just because that particular submarket is pretty strong. So even though this owner was neglecting the property, he was probably having still decent occupancy almost in spite of himself. And money needed to be put into the property. So what we've done is now we've come in, we make sure that we're extremely well capitalized to navigate some of the challenges and headwinds of the next year or two, like I talked about. But we have a really great opportunity to come in and just bring up occupancy from where we were, still pretty strong, but just a 7 to 10% increase on what is already taken place in that particular submarket. And if we do that, and we're doing a pretty extensive CapEx program that we've hit the ground running on. We have a CapEx specialist that's part of the team. We've made sure that we're extremely well capitalized. So I'm pretty bullish about this particular property. I think we've put out some underwriting to our investors that's pretty conservative, that's going to yield a little over 100% return over a 5-year projection period. That was pretty conservative. I'm fairly optimistic that we might be able to come in on the basis we picked this property up at right now, and the opportunity that's there to pick properties up at lower basis right now than we've seen in years, that we're going to be able to hit and hopefully dramatically exceed that projection to investors.
Okay, that's great. What do you think about the kind of mood of people right now? Do you think they are investing in properties? I mean, the equity market, right? Do you think that people are readily investing in properties, or is there kind of fear in the market about perhaps because of the news that people have been hearing about things happening in our apartment space? What do you think is the mood of LP investors right now?
I think in talking to LP investors that a lot of deals right now, and I'm not even talking about deals that are some of the horror stories that make up a very small amount of the total deals, but obviously they generate the biggest headlines and make the most noise, maybe a foreclosure here or there. Somebody that got greedy, like I referenced a little while ago here in the last couple of years, and didn't move forward intelligently. So certainly that noise is out there and people hear that, even though it makes up a very small part of the space. And of course, those types of stories end up being the very potential great buying opportunities for people like me that are plugged in, that we're going to see here coming over the next year or two. Now, with that being said, even deals that are operationally strong, that aren't in danger of foreclosure, they face some headwinds in terms of these completions coming online, maybe some occupancy challenges, maybe some challenges related to financing. Even properties that had rate caps had to deal with these prohibitive rate cap escrows that the lenders were putting on the properties that needed to be accounted for. So there's certainly challenges out there, and a lot of deals, even if they're operationally strong and rising expenses, have obviously been unforeseen expenses that kind of have shot up, have been a concern for deals. So even deals that are operationally strong, they might be withholding distributions now. So there might be investors that they have a lot of their money tied up in multifamily deals, and those deals, although they're keeping their head above line and they're producing cash flow, they're not distributing to investors because they're just being prudent and being cautious, so we can get here and navigate these challenges out to the other side. So sometimes investors have the desire to invest because they see the opportunity that's here now as a result of this reset, but maybe their money is tied up into deals. And hopefully some of those deals that those investors are invested in are not going to sell for the next year or two, because if they're able to wait it out, we're going to see the market come back up, and those deals are going to be able to sell for a lot more, which is going to benefit the investors in those deals. Yeah. So I think there's sometimes people not having the liquidity to invest right now because of that are actively involved. I think there's some natural fear and concern. And I think that fear and concern is often reactive to what has taken place in deals that were bought in the last year or two. Yeah. And I think there's a re-education that has to happen there, because I think we have to tell them that, look, these stories that you're hearing are from deals that were bought in the last couple of years under very different circumstances than the opportunity we have right now to buy deals. Yeah. And you have to re-educate them as to why now there's a lot of opportunity to buy deals. And those deals aren't going to be it's not going to be the same circumstances. These deals that they're hearing maybe some of the horror stories about, or some of the struggles that were bought in the last year or two. So I think there's a re-education process. And I think people are just looking for people that have that experience. They have the track record. They've been through several different ebbs and flows of the apartment industry going back over a long period of time. I think success leaves clues over a long period of time, right? Anybody can come in. Well, not anybody can come in, but a lot of people can come in and achieve success over a short period of time. But I think it really talks about the character of somebody that does something over a long period of time. And they go through a lot of different ebbs and flows and challenges. And I'm not the only one. There's a lot of other successful people, so I'm not just tooting my own horn here. But I think track record and reputation is important. And obviously new investors too, right? You got to start somewhere too. Yeah. But generally, even in partnerships that involve newer people, there's going to be some experienced partners that are going to be part of the team as well. And I certainly think experience is very important. But I think that's kind of the general feel out there. Yeah. So I tell people, look, if you have the liquidity to invest, whether it's cash or self-directed IRA, trust, et cetera, and you're looking for a great time to put your money to work into a cycle that I feel is going to be one of great wealth creation and wealth building, right now is the best time it's been in years to get into multifamily. And that's not just a sales pitch to sell what's going on right now. Like I said, I was pretty cautious over the last couple of years with what I saw going on out there. But I'm really bullish and excited about apartment investing right now. Okay. So I would encourage people that if they're looking for a vehicle to passively invest in, find the people that you want to trust to invest in based on their track record and experience, and that are out there intelligently buying, because even now with the opportunity that's here, there's going to be, because of the headwinds and challenges, some deals that go south. So you need to make sure you're partnering with people that are not going to be those, and those are the sponsors that are experienced, that have that track record, and align yourself with them. Get in their databases, attend their events, and learn about their potential passive investing opportunities. And, I'm looking forward to, again, getting quote unquote rich in this business over the next 5 to 7 years, and taking investors that trust in me along for the ride. Yeah.
No, that's great. That's great. It's a lot of good information that you're sharing. So, what do you think about variable interest rates? It has created a whole lot of upheaval in the current market right now. What do you think about variable interest rates, and what is your framework for using them?
Well, obviously, a lot of people got in trouble over the last couple of years with variable interest rates, but they only really had. Nobody could foresee the interest rate run up that happened in the spring of 2022, right? Yeah. We were like at 3% interest rates. Nobody saw that they were going to shoot up. But when something's really low, there's usually only one way it's going to go, right? And it's going to go up. Yeah. And with that being said, I think that on the right opportunities right now, variable interest rates could be a good tool now. But employing them intelligently, right? A lot of people got burned because they didn't have rate caps in place on these variable interest rate loans. And that's creating a lot of the opportunity to buy now, because these properties are distressed, are going to be needing to sell. And that's going to create opportunity for people like me, and investors that are looking to buy right now. They're going to be the result of some of those. With that being said, a certain deal right now, you might be able to intelligently buy and use bridge. With that being said, obviously I prefer, fixed rate if possible, just for the conservative element that it brings. And so that's my thoughts on it. I'm not going to blanketly condemn, any bridge, but make sure you protect yourself, obviously, with a rate cap that fixes that rate for that 3-year period on any loan, certainly going forward, just to protect yourself. Yeah.
That's great. Well, thank you, Aaron. I want to move it a little bit to financial independence and kind of ask you a question around that realm. So what is financial independence to you? What does it mean when you hear about the concept financial independence? What does it mean to you, Aaron?
Financial independence to me, really, it's not just about accumulating zeros. It's not just about adding another zero to net worth. A rich life to me is about creating experiences and making memories with family, loved ones, friends, and the enjoyment of life, and having the means and ability to do that with people. And then in this particular field for me, by helping other people achieve their financial goals, it means that I'm helping those people do whatever financial independence means for them. Their definition might be different. I think I've heard it said that the best thing about having money is not needing to worry about having money. And being able to make decisions and to create experiences that add to life and that help to make me better, right? All of these experiences that I'm able to enjoy as a result of having money, they allow me to then become a better human being in all different areas. And by becoming a better human being in all different areas, that allows me to be the best deal sponsor I can be.
Right.
Before the podcast, we talked about the interconnectivity of every part of life.
True. And
I really completely believe in that. Nothing that you do in one area of life doesn't affect every other area of life.
Right.
So when it comes to financial independence, I want to use wealth to inform who I am, to make me the best possible human being. And I want to try to create an increase of life for anybody that comes into contact with me. If somebody comes in contact with me personally, if somebody comes into contact with me professionally, if somebody trusts me to be a sponsor and invest passively in my apartment investing projects, I want to have their life increase as a result, certainly in the financial realm. But, I try to have a positive impact in all different areas. I welcome anybody that's watching your podcasts, and I'll send you the link to my Facebook, because I post a lot of general real estate information there. But I also talk about a lot of other things, different parts of my life where I'm seeking growth and changing things to always make myself a better human being. And I like to share that with people. I believe that people like to do business with people they know, like, and trust, and the first word there is no. So I think that I think it's important, and some people in this industry, maybe, you don't really truly get to know who they are. Maybe the face they put up is not really who they are behind the scenes. And I always strive to be authentic, like who I am sitting here with you is the same guy on Facebook. It's the same guy at real estate events. It's the same guy, at the gym. So all of that plays into financial independence, right? It's wealth monetarily, but wealth is not only defined by money.
By money, yeah. No, that's great. That's great. And I wanted to ask another question about the habits that you have. Just like money, habits can accumulate over time, right? They can accumulate and grow exponentially. You can add habits. So what are some of I read your Facebook comments and posts, and there are some habits that you over the years have dropped, you are helping other individuals to drop that particular habit, right? So what are some of the habits that you've dropped over time and habits that you've picked up over time to actually help this current Aaron that we are seeing right now?
Yeah, I think, and what you may be specifically referring to, John, is that a little over 3 years ago, I made the decision to stop drinking, to make alcohol a part of my past. I was never a daily drinker, but like a lot of people, I was a binge drinker in that I would drink too much at certain times. And I didn't really like the effect that it was having on my life, on my relationships, how I felt, certainly physically, my health. I had just turned 50 years old. When you get to be that age, you're not there yet, but when you get to be that age, you know, you kind of start to look out, you know, toward the future, and you're thinking about longevity, and you're thinking about being disease-free, and you're thinking about what kind of health do I want to be in when I'm 60, when I'm 70, when I'm 80. And I knew that I wanted to be in the best health possible, not only now, but at those ages. And I want to feel good now. So a little over 3 years ago, I made that decision to leave alcohol behind and live a completely sober life. And at first I thought that that was going to be just about giving up alcohol, but I've learned since that it's been about so much more. And I've grown in so many other unrelated, or so it seemed, areas that I wouldn't have foreseen. My relationships got better. I learned how to sit with uncomfortable emotions and deal with them. And that really helps as an apartment investor. Because I tell you what, like when you've been dealing with some of the challenges of this market over the last couple of years, that's created some of this opportunity that we're now seeing, sometimes it wasn't easy. And I know that if I'd still been drinking or in the stages between drinking bouts and I was in a state of withdrawal or craving, I wouldn't have been at my best to be able to deal with those challenges. I would have been more reactive. And instead, because I've learned how to sit with things that are sometimes uncomfortable, I can sit back and take the information that's presented to me, and I can be thoughtfully responsive rather than being reactive. And there's a big difference. So even in that case, just emotionally, it's helped serve me over the last couple of years navigating some of the challenges here that we faced in the multifamily industry. Everything in my life has truly gotten better as a result of that decision. But yet, you know, I'm still out there, and I'm still fine being around people that drink. I never removed myself from situations. I'm a big live music fan. If anybody follows me, they'll know that I really enjoy live music. And obviously, live music is usually presented in atmospheres where there's alcohol present. So I knew right out of the gate that I was going to have to get comfortable being where alcohol was present, but not drinking myself. So I'm comfortable in those environments and going in, and you know, I'm happier and I enjoy those atmospheres better now because I have a clear mind and a clear head. And I know that I, you know, wake up feeling fantastic, excited and ready to face the next day instead of being hungover from the night before. And you mentioned, I think I even shared something on my Facebook today about some guys here in the real estate industry that some people would know that made changes as a result in that area and one hit a 2-year anniversary of not drinking, and I think the other just hit 18 months. And they both directly credited me and me being transparent and sharing my journey as to inspiring them to begin their own journeys. And that's extremely fulfilling. Sometimes I think I'm just putting this information out, and is anybody listening? But then to read something like that, you see that, wow, you know, you're making a difference. So I want to make a difference, you know, in all areas of my life. I certainly want to make a difference through real estate investing and helping people achieve their financial goals. But if I can, by being open and honest and transparent and allowing people to really get to know who Aaron Katz is, if I can help and inspire them, it's all about advancing though, right? It's all about growth. And it's all about helping people get, like I said before, an increase in life in different dimensions and areas.
I like that. And thank you for sharing your story. Thank you for being very transparent and open. Not too many people are like that, you know. And it's great. When I read that, I was like, wow, this guy is really making impact, you know. So that's good. I want to ask you, you know, so you spoke about the habits that you dropped, which is, you know, drinking. What other habits, like, working out, eating right? What other habit did you pick up over time that really contributed to who you are today as a person, right? So,
Yeah, I'd love to speak to that. In fact, in the last year, I've made a lot of changes. It was interesting because for the first 2 years after I quit drinking, I had a few extra pounds on me, and I was kind of hoping, maybe I quit drinking. I'm not taking in all those extra calories. Maybe I'll see some of this weight come off. Yeah. But then two years into it, I was pretty much like around 177. I'm a muscular guy, a stocky guy, but I'm not a tall guy. I'm 5'8". 177 was a little bit heavy, even though, like I said, I'm a stocky, muscular guy and always have been. But I started thinking even more about longevity, and I started reading books by people like Dr. Mark Hyman, people like Dr. David Sinclair that wrote a lot about longevity. There's a lot of great longevity books. Other stuff you start to think about, like I said, when you hit the north side of 50, like I had. So I decided I need to really revamp. Not just that I haven't drank now for 2 years, but I really need to revamp the way that I eat. I'd always been a voracious exerciser. Pretty much from the time I was 15 years old, I've almost always been an on and active exerciser, which certainly yielded benefits. But I think anybody that's really made these types of changes know that the diet component and what you eat is huge. So I've employed and really changed over the last 10 months what it was that I put into my body. Not only what it was not that I was not going to put into my body, like alcohol, but I'm not going to, I eliminated processed food. I eliminated a lot of starchy carbs. I really hardly take in any of those now. So downsize the portions, because I used to be a big portion guy, right? We live in Texas. Everything's bigger in Texas. These portions are huge. So, instead of getting the 12-ounce steak, I would get the 8-ounce steak. And I really started eating more vegetables than I'd ever eaten before in my life. Get enough fruit, but not too much. So if anybody's interested in like the types of dietary changes I made, I would encourage you to go out and look up an author. Like I said, Dr. Mark Hyman. He's written several books, Food, What Should I Eat, and others that is kind of like the plan that I followed. But I've dropped about 16 pounds since last June. I'm about 161 now from like 177. I feel better than I have in years. I had still inflammation. Obviously, alcohol causes a lot of inflammation, and I'd given that up, so I'd seen some inflammation go away. And inflammation is one of the main things that ages us. That's why alcohol is such an ager. But eating the wrong foods can also be inflammatory as well. So once I changed my diet, some of those aches and pains that maybe I was starting to think, that has to do, I'm getting these because I'm 52 years old. It had nothing to do with the number of my chronological age. It had to do with the inflammatory foods that I was putting in my body. So I stopped consuming those, and now I feel unbelievable here at 53, and I hardly have any inflammation. And I don't have the aches and pains that I hear other people, you read, we're 53, I'm old, and it's like, that's not my mindset, and it's not the way that I feel. I feel great. And obviously, chronological age is not the true marker of how old we are. It's our biological age.
Sure. Wow. Thank you for sharing that. So I wanted to know, you mentioned some books that that you've read about health and all that, and also business. So I follow you on Facebook and follow like your progress, your growth as a person, right? So I want to know, what are some of the books that you recommend to my readers? So my viewers are majorly W2 income earners, and some of them might not have like time to really sit down to read. Some of them might just listen to audio books like I do, right? So what are some of the books that just comes top of mind for you that you could recommend to my audience to continue on their journey in personal development?
Well, in the area of finances, I certainly think that mindset is of a key component, because obviously the way that we make money and the model that we look at here, it's very different from the typical model out there, right? That people grow up with, and in terms of how we make money. So I think that there's some great books out there that people can soak up. the mindset, the mechanics of multifamily investing, but unfortunately not enough. Then there's mindset books like Rich Dad, Poor Dad, of course, by Robert Kiyosaki, a benchmark book for all people. And I think that I'm really always trying to work on my mindset, because if you listen to the doom and gloom out there, that's oftentimes not based on fact that people hear and read and see in the mainstream media. If you soak all that in, you're going to miss so many wealth creation and wealth buying opportunities. You need to be very discerning in what it is you choose to read. So protecting your mindset, just like not taking in junk in terms of food and putting that into your body, you got to do that with your mind. Right now, because I'm thinking of 2024, it really almost feels like a relaunch of when I came into the business, because of the reset that's taken place and the opportunity that's now here. I'm going back and rereading some of the classic books that I had read, like back in 2010, 2011, and 2012, when I was just starting my multifamily journey. And I'm talking about like even some like of the New Thought classic books that came out in the early 20th century, books like Napoleon Hill, Think and Grow Rich. I just reread a fantastic book called The Science of Getting Rich by Wallace T. Wattles. This book was written in I believe 1912, 1915, 1920. But there's timeless principles in there around wealth that apply. And obviously, when these books are written, they don't know the financial circumstances of the last couple of years, or 5 years ago, or 10 years ago, or 20 years ago. But it doesn't matter, because what these books offer is timeless principles in the area of wealth creation and wealth building that anybody can take and then apply to the intelligent knowledge of what's really happening out there and the opportunity that's there for us. So I think it's the combination of all of those things that can help make somebody successful now in terms of the areas of financial independence and wealth creation and wealth building. Those are a few that jump out to me.
Yeah. That's fine. I think our listeners.
What about for you?
So for me,
tell me, maybe you'll turn me on to some books that you're reading right now.
So currently, what am I reading right now? I'm reading Hunter Thompson's book on raising capital.
Yep, I read that.
Yeah, I think I just finished listening to what's his name, Matt Fairmouth, or somebody about raising capital too. So I just read both of them back to back. Prior to that, I read E-Myth Revisited.
Yeah, Michael Gerber.
Yeah,
that's a great one.
Right. And I read 5 a.m. Club. And that was a book that really helped me a whole lot to wake up early, to dedicate more time to my own personal development. And, that 1 hour, 2 hours that you wake up before everybody to, capitalize on doing some things about your own person and personal development, working out and all that. So that's something I'm currently implementing in my life right now, and it has definitely been helping me, grow as a person. So we are coming to top of the hour here, Aaron, and how can my listeners get in touch with you? How can they go to your Facebook, subscribe? Do you have YouTube? Do you have blogs and all that? How can they connect with you?
A few different ways. First, I launched last year a brand new website.
Okay.
It's aaronkatzappartmentinvesting.com. Okay. It's very simple. Hopefully you can share the link and in your notes. Yeah. And I've really built out a very robust website that has featured properties that feature some of the success stories from my 12 years as an apartment investing deal sponsor with actual information and real returns to investors. I've built it out with a lot of passive investor testimonials because I don't think there's anything more. I can sit here all day and tell you about how great I am as a steward of people's money and why they should invest with me in projects. But there's nothing more powerful than a testimonial from other people that have invested with me in projects. Right. What returns did they experience? What was their experience like? How did I communicate with them? So I just went out and solicited a lot of my passive investors over the years, some of whom have been loyal investors and some whom have invested with me in many projects over 10 plus years. And I said, I'm not going to edit your comments. Just tell me what it's, be honest. What's it like for you to invest? And I just threw them all up on there.
Nice.
So I've built, that's on the website. They can go read a lot of unedited passive investor testimonials. So if they're considering investing with me, they can hear what that experience has been like for other people. Nothing more powerful than that. Why 2024 is a great time to invest. We've talked about some of that, but I also have a page there on the website. And there's a few other things. They can download a free report just in general on the top 7 reasons why multifamily is a solid investment. They can do that at aaronkatzappartmentinvesting.com. Download that free report. It's a 15-page report. It's got a lot of good information. There's some blog articles I put on there. And maybe most importantly, they can join the Aaron Katz Apartment Investment community there. I'll follow up with them, and then that will put them in line to learn about future potential passive investing opportunities with me. So I'd encourage everybody to go to the website. I also have, for those local to DFW, I've launched, and you referenced it earlier, I have what is one of the biggest and I think also best local and free apartment investing meetup groups. It's very simply called the Aaron Katz Apartment Investing Meetup. We have about 1,300 members in that group. We tend to draw big crowds at events, so they're always great for networking. We usually bring in special guests. There's content that's relevant and educational to what's taking place at any given time in the current market. So people can go to meetup.com and find and join that free group, the Aaron Katz Apartment Investing Meetup Group. We're recording this now about 2/3 of the way through March. I don't know when you're going to edit it and put it up, but I have a big event coming up here in Addison, in North Dallas, Addison area on Saturday, April 20th. And I'm going to be bringing in one of the very top brokers in the Dallas-Fort Worth multifamily market. One of those brokers that's the 10% that's doing 90% of the business. And they're going to come in, and we're going to do a state of the DFW apartment market right now. So it's going to be extremely educational for anybody that's there. But, you've come to these events, and you know it's not only about the content, it's not only about me, but it's about the other people that you meet at these events and how they can help you along your growth and financial journey. So, and I've kept that group free. It's really just a way that I give back in the spirit of abundance to an industry that's been very good to me and my family over 12 years and allowed me to build and create wealth. So I have that meetup group, and I'll also share, and you can put it in the notes, the link where people can go and follow me on my Facebook page. I'm pretty much at my 5,000 friend limit. So now I've set up my page to where people can follow me, and I post a lot of stuff publicly in general about real estate investing, as well as about some of the other areas in my life that we've talked about today, and they can get to know who I am and what I'm up to by following me on Facebook as well. So the website, the meetup group, the Facebook page, those are really the best ways for people to connect and join with me.
Well, thank you very much, Aaron, for coming out today. Like I said in the beginning, so my story in apartment investing wouldn't have been told without mentioning the name of Aaron in it, right? Because he was very pivotal in helping me connect me to the community that I needed to scale my business. So thank you very much for availing your time to talk to us today. Hopefully we'll do some great things in the future together.
Yeah, I like it, John, and I want to say that I've enjoyed watching your journey, and I'm seeing what you're doing right now, and from where you've come from when we first met, and you're growing in this industry, so that's very rewarding for me, and I'm happy to see you doing some great things right now as well.
Yes, sir. Yes, sir. Thank you very much.